This concept that I'm going to teach you here, this technical technique is called what I call the no follow through technique or the no follow through concept. And this is one, not the only, but this is one of my key ways to finding major turns in the market, major tops, major bottoms. Now, because the market has been in a downtrend for quite some time, I'm going to teach this concept to you from the bottom up. But remember, everything I'm teaching you is applicable in the other direction as well. All right. So always remember, everything I teach you can be played both long as a concept, buy, and short as a concept, sell. But since the market has been dropping, I think it's more relevant for us to really do the deep dive from the bottom up. This is the key to finding major bottoms, major, not small bottoms, because there's a way to find small temporary bottoms too. But this is the major turns. You want to be an expert at knowing when a major bottom is in place in a stock, in the overall market, in a cryptocurrency, whatever you trade, boom, this concept is going to be your best friend. All right, let's go. So this is no follow through event number one that I want you to be aware of. And I'll have to pick it apart a little first so that you thoroughly understand it. The no follow through event that I want you to be aware of comprises of a fat, sizable red bar. You can have, some wicks on either side of the fat bar. It doesn't have to be perfect like this. This is just a drawing, right? So you can have a little wick at the top, a little wick at the bottom. What I'm saying is that there's a lot of freaking red in the bar. So this is not a normal red. It's a sizable red. It's more than the little green that you see as the second bar. It's sizable, a sizable red bar. But if you look at this event that I'm showing you here, that I've drawn here, is that this bar has zero red after it. Now, let me tell you why that's significant. A fat red bar, write this down, has like an 83%, 82, 83% follow through rate. Think about this, guys. 82 to 83% of the time, another red bar follows a fat red bar. That's how reliable these bars are. Do you know how wealthy you can become in the markets with something that has an 82% success rate? It's like being right almost 9 times out of every 10. And sometimes 10 times out of every 10. That's how you get the 82, 8.2 times out of every 10. So there's an 82+% follow through, meaning that most of the time another red bar follows a fat red bar. A lot of traders then understand, Oliver, now I understand why you dive into fat red bars on the short side, because 8 or 9 times out of every 10, you're going to get more downside. That's the first thing I need you to understand, that 82% follow through rate. But in this case, this is the exception. There is no follow through. The next bar is green. There's no additional red. Like what? Then the next bar is green. What? Okay. That's still not the special part. The second special part is that the red bar to the left gets totally removed. It doesn't matter which green bar does it. It could be the 5th green bar, the 10th green bar, the second green bar. It could even be the first green bar. The key is that the red is completely recouped and the green goes past the beginning of the red. It takes out the high of the red bar. So the 3 things that I need you to know that makes up this event: fat red bar, 1, 2, 0 follow through, no additional red, 0. And 3, the green completely erases, completely recoups, completely neutralizes the red by trading above the red bar. That is a major bottom. The odds of the low of that red bar being revisited or even broken is extraordinarily low. You have found a major bottom in your stock, in your option, in your bond, in your market, in your index, in your futures contract, in your cryptocurrency. Doesn't matter. Powerful, no follow through event. Remember, I told you that a fat red bar has like an 82, 83% follow through rate, which means that it should produce another red most of the time. What I have found in the markets, traders, is that when something is supposed to happen but doesn't, it's big the other way. This fat red bar is supposed to produce another red bar, but it doesn't. I have found that when something with a high probability is supposed to happen but doesn't, and the opposite happens, the opposite direction is big. It's almost like the expectation is so overwhelming that the reversal shocks everyone and catches everyone off guard, and a complete unwinding has to happen. It's almost like what is commonly referred to as a short squeeze. When so many people are short the market, I want to buy, because every move up squeezes the shorts and they have to actually unwind the position. So this is almost like that short squeeze scenario. It usually kicks off a very, not all the time, nothing is all the time, guys. Just understand that. Nothing is all the time. Not all the time, but a lot of the time it kicks off. That low is a very significant low, and the move up is usually quite significant. Now, this is the version 1 of the no follow through event. Version 2 is this: a little follow through, and then boom, we take it out. So the first, remember, the first had 0 follow through. There's not a single ounce of red after that fat red bar. And the second version is, okay, got a little follow through, but is that really follow through if all of the red eventually gets taken out? Version 2 is allowable. A little follow through, like a little slip through of the red, then boom, all of the red, the little one and the big one, is completely annihilated, completely neutralized. It is the neutralization that I think is also very important not to miss, guys. It's not just that the fat red bar produced little to no follow through. This is little follow through, and this is no follow through. So you'll often hear me say little to no follow through. It's because of these two scenarios: little follow through, no follow through. So we're talking about the little follow through now. The complete removal of all the red is very, very critical. And that's your buy point. It is the removal of the red where you know, now I have zero doubt, this is the bottom, I'm going in. Now you can, guys, I'm telling you, you can pick any financial item, any stock, any market, go back in the past, you can pick any time frame, intraday time frame, daily, weekly, doesn't matter. And then you can go to major tops and major bottoms in the past, and you're going to see a lot of them, not all of them, a lot of them started just like this. In fact, why don't I just show you that? Look at the lowest low on the Bitcoin chart. Now we're looking at a 15-minute, no, we're looking at in 1 hourly time frame of Bitcoin. Look at the fat, look. Remember that story, guys, I used to tell you? I said I had a childhood friend, right? Fat giant red bar, zero follow through, guys. Don't confuse these reds as follow through. What I mean by follow through is that there's no lower red. Do you understand? Follow through is a continuation of the red. These reds are not continuations of the red because they're not lower than the red, the initial red. So this marked the major bottom, fat red bar, boom, there is your entry price. And what's that sound? I want to see people do that for me. Can you do that for me in the comments? That's a fiat counter. All right, we make the fiat and we convert it to Bitcoin, right? Just do it for me in the comments. I want to see. La, 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 la. It's going to kill me. All right. Okay, guys. So look. So here, boom. All right. You want to see another one? We can stay on the same chart. Uh-oh. La, 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 la. Look at this one. Fat red bar. You see the fat red bar? So you have this fat red bar, right? Fat red, but one little follow through. That is why you'll often hear me, as I mentioned before, little to no, little or no. This is no follow through, and this is little follow through, little or no. All right. And here's the little follow through and okay. And here's the no follow through. All right, guys. I'm going to stop teasing him now. I'll tell you, it even happens a lot in these micro scenarios. Like you see this bar here? This is a troublesome bar. This one here, that's a troublesome bar right there. But it has no follow through and it gets taken out. Boom. Red, no follow through and it gets taken out. This no follow through concept, guys, I will tell you this. When I discovered this, it was like a freaking bright light that completely changed my trading world. It was one of those, and there have been a variety of these moments, but it was one of those moments that caused a paradigm shift that changed not only the way that I saw the markets, but I mean, it just exploded my opportunities. I started seeing these things all over the place, and it made me realize, like, oh my God, this concept gave me the ability to be able to, with confidence, say, that's the low. Do you understand how valuable that is? To have that ability. Most people on planet Earth cannot do that. Do you know that if you ever got good at that you'd become the $1 million person? How many firms would hire you and pay you millions for your ability to say, that's the low, that's the top? This is extraordinarily valuable, traders. Like when I got this, it was like, wow, oh my God. Don't forget that this is applicable on both sides of the fence, as it were, right? You get these fat green bars, right, that don't really follow through. Look at a little follow through, and that's the top. And then a fat red bar, no follow through, and that's the bottom. It's freaking crazy, right? So there you have it, guys. Very valuable technical concept that, whether you realize this or not, will change your trading life forever. Go to work. Do you know what that means? Do not take this session and be like, oh yeah, that was very nice, that was very cool, Oliver, and then go about your merry way. Do not do that. First of all, you should watch this again. Okay, that's number one. You should watch this again. Number two, you should go out into the markets, whatever markets you trade, whatever time frame you trade, and then start looking at charts and search for the major turns. Like, where did your item drop real hard? Go to the top of that. Is that a no follow through? Then where did your item come off the low real big? Go to the beginning of that. Is that a no follow through? Sometimes it'll be, sometimes not. When you find one, take a freaking snapshot of that, drop that into a folder or something on your desktop. Collect these things, collect these images. This was before the times you could do this. So I used to actually have a charting service, and I'd mark these things up, take the sheet out of the book and put it in a folder. And I had a file cabinet that I used to keep all of these plays in. They weren't plays I necessarily took. They were just the images of them. And every now and then, like, if I had nothing to do, I'd pull a folder out. Maybe there was 101 pictures of this one event, and I just flip through, glass of wine, flip through. And it is the repetitive seeing it over and over again that really, first of all, it increases your opportunity spotting skills. So what it does is it gives you the ability to recognize it instantly. That's a huge, valuable asset, because a lot of people see things after the fact, but you got to see it when it's happening. You can't trade the past. By seeing so many of them, you're constantly able to, you eventually develop the opportunity spotting skill where you say, oh, that's it. That's the no follow through event while it's happening. And then you'll get good enough to say, well, wait a minute, here's a fat red bar. This could be a no follow through event. Let's see. Now you're anticipating it, right? And that's a different level. The other thing that will do is it'll give you immense confidence, unshakable confidence in hitting the freaking buy button or the sell button when you need to. This is a major problem people have. They learn something and they believe it works, and they still lack the confidence to do it when in the heat of the battle, when they're called to action. You can't do it. And they start, oh, but the market, and let me check this, let me double check that, which is nothing more than an excuse, is that I'm scared. And so you want to get over those things. And this is the way you do it. You've got to just see hundreds, if not thousands of them. And I used to flip through. No follow through, no follow through, no follow through, no follow through, no follow through. Boom, boom, boom. See hundreds, thousands of them. And that's the work. Some people, most people don't want to do the work, traders, but this is the work.